two big headlines hitting our retail radar. Let's kick it off with L Brands, getting a little bit of a boost today after CNBC.com reported that the retailer is getting close to selling its embattled Victoria's Secret franchise to private equity firm Sycamore Partners. Shares of L Brands up nearly 33% this year, but still down more than 76% from their all-time highs. So could this potential deal be enough to turn things around for the stock, Karen? If they sell off Victoria's Secret, though, they've got Bath & Body Works, which has had a nice trajectory, but that's kind of what they have left then.
That's what they have left. I mean, the problem has really been these mall-based stores, right, and traffic. And I don't know. I've sort of missed this evolution of the business, which I don't regret, really. And I wouldn't be inclined to jump in here, actually.
Yeah, I think this is a really tricky one, and I often wonder what happens to Victoria's Secret, because we talk a lot about how they have obviously honed this very sexy image, which is not really in vogue right now. But if you change a brand's DNA, then what is Victoria's Secret? That's my sort of worry. What's Sycamore going to do with it, Tim?
Yeah, and L Brands is one of those great examples of things. The time to make the most money is when things go from just awful or terrible to just kind of bad, and that's really what's happened here. So you've got a couple rounds of earnings numbers, and the stock's moved from 18 up to 27. It's now at a level where I actually think there's really needs to be a fundamental turn, and I don't think you're going to see that. Yes, you can measure the sum of the parts, but I don't think there's much to do with the stock after this move. And you know, I could be wrong on this, but we've seen these moments in the last 2 years where L Brands had an opportunity to turn that part of their business around, and I don't think it's going to happen.
I always think that you see in technicals, it's always in the chart. So all the fundamentals, it's always that bet. Who has it right? Is it the fundamental player, a fundamentalist, or is it the technician? And usually in the chart, everything's in there. And Tim had just mentioned, since November, the stock's up 60%. It's bouncing around overbought on a relative strength index. Could it go higher? Of course, these things can blow off. But to enter it now up 60%, I think you have to know the story really well. So if you're one of those people, then you could dip into it now. I'm not one of those people who knows the story well enough to buy it up 60%.
The story has changed a lot over the years when it was limited, and they own lots of different companies that are now its own publicly traded, but that's too much to get into right now. So L Brands is not the only retail name that's making deal news today. Mall owner Simon Property Group, talking about malls, announcing a more than $3.5 billion acquisition of rival Taubman Centers. The deal comes as a broader slowdown in brick and mortar shopping has really forced retailers to consolidate and seek alternate ways to attract consumers. Shares of Taubman surging double digits today. So could this be a sign of more retail M&A to come? Guy, what do you think about this one? I mean, is this just two players that are in a sector that is going through a lot of change, so they're stronger together than they would be apart?
That would be my sense. I mean, Karen could probably speak more intelligently than I, but I think that's exactly what's going on. And sometimes two bad things doesn't mean it's going to make a good thing. So maybe there's synergies here, maybe not. I think you take profits in both if you were lucky enough to be in them on this move.
Karen, what do you make of this one?
Well, these are the cream of the crop, right? When you think of Simon Property Group and Taubman, I mean, I didn't think Taubman would be necessarily sellers. And if you look at what a giant premium they had to pay, Simon had to pay to get it, Simon was even up on that news. So I think there is something for them to do to get. Simon is not expensive here, even with this acquisition. I think they're looking at the best of the best. There are malls that will survive, as opposed to some of the other lesser malls, something like WPG or other ones that we've seen just, whittling away. So, I mean, this is the cream of the crop in the space.
Simon has been making some interesting deals, whether it's buying a retailer out of bankruptcy like Forever 21 with Partners, or this one today, like you said, not necessarily expected.